Another episode here, and today what we're going to do is we're going to take a look at Lulu and how I might trade this stock. It's kind of popular right now in the news, and give you some thoughts and takes on it, and maybe how I would approach it. Keep in mind, none of these are recommendations to buy, sell, or trade anything, just my own personal thoughts and opinions. Okay, I'm going to go ahead and kick some things off for you guys. Lulu here, definitely selling off in a big way. So as we look at this, the stock's very volatile. So as I'm looking at the volume picking up, and it's definitely selling off, but the way that you might look at trading this, and my way of trading might be a little different than yours. So as I look into doing a trade right here, and I got a kind of a portfolio that's down here, but I'm looking for a possible snap back up as I look at some of these things. So here, the way I might trade this is kind of like a 50-50 spread. So as I'm looking at this, that it's going to sell off, I'm looking at just putting something right at the money, somewhere around here, and just looking for it to kind of snap back up sometime in the future. You know, this stock's already down quite a bit. It snapped up and then pulled back. So when you look at these snap ups, you're kind of looking at, 39 points. And I'm just looking for, hey, maybe it'll keep going down and then it'll snap back up. So I'm thinking that this is overshot. If I look at some technicals as well, it's already fairly sold off. And you can see today it's also trying to kind of come back a little bit. So it was down at 327 or so, and now it's at 341. So that spread, that range is about 13 points. So if I put a 50-50 spread, and I'm looking to kind of just get out of the position as well, I'm just going to try and make about a 50% profit on it. 50% at 50-50 with a call, kind of right at the money right here. And I'll do about 39 days just to give it some room. I could go 46 days, but I do have to pay close attention when the earnings are. So 329 are the earnings. So let's just say maybe 46. I mean, I could go 46 days as well. I think 39 will be enough, but if you're cautious, go a little bit longer. Actually, these have $5 increments. This one has 10. So I will do the $5 increments and see what we can do. Although we are going to be a little bit shortchanged. This would be better if it was 342 and a half to put it in the middle. But that's what we got to deal with. So anyway, we'll put it right here. We'll buy this and sell that. And now I've got kind of this spread at $2.38. Let's wiggle it a little bit. 340, 345. Okay, so there we go, $2.38. And that's what we're looking for. And if it pulls back, management style on this is very different. It's just basically you're looking to put it on and you might be taking a full loss on it. I'm putting it right at here, which gives me kind of like a 50-50 shot, okay, here. And I'm actually only trying to make about 50% on this. So this is kind of like a 50-50-50 kind of strategy. So 50-50. Okay, so here at the money, you could call it an at the money strategy, whatever. What we're trying to do here is take this 238, and we're trying to make about 40-50% on it. Okay, so when we look at something like this, okay, I'm going to go ahead and try and see if I can get it for about 230. Go ahead, put it in. And I'm just going to put it into kind of a weekly trade here for now and toss it in, and we'll see if it get filled. I'll create a new group and we'll call this 50-50, and then we will cancel and replace. So you try and work this one, and maybe I'll have to go to 235. Again, this one's a paper platform, but I'm just showing you the concept here of what types of trades you're doing. Is like, look, they're oversold. You try and get them, let it work, let it sit. In the paper platform, it operates completely different. But it just shows you, look, we'll let it work. We'll let it work if we get filled. Now, what I'll also do is put a good till cancel order on it for aiming to kind of get out of the trade a little bit later. So here, work the trade. And why would I do a strategy like this on something like Lulu? Well, it's because, you're more contrarian. You're just looking for a little bit of movement. And this stock already, when you're really looking at it, we're all the way over here. This is 2021 prices. You're just looking for a little snap up. You're not looking for, full-fledged move to the upside and to the moon at 500 here. I'm just looking for a little snap back. And that's why I might put a trade on it like this. Let's see if we got to pay up to 240. Let's see where we get filled. And See here if it'll get filled. Again, you're just playing. This is, you know, and Lulu's not as liquid, but it can whip very quickly. So if you look at this 3 million, but it's very active today. And what you might do is, okay, we'll try 245. Let's see if this will get filled at all. Because now I'm starting to pay up. And I can also try the 39 days. The problem here is at I got to go with a $10 wide here with 39 days. If I go 32, I might be able to do it with 32 days. And let me see what that looks like. Because the pricing between, what I'm trying to do is regulate and figure out these pricing. The pricing is not much different, you know, 20, 30 cents to get that much more time. It's not as big of a deal. So that's why I wouldn't mind going longer. In fact, I'm paying up for a shorter duration. What is it, 340, 340? But look at this. A shorter duration here is actually more expensive than this. And that's maybe why it's not getting filled. Let's try this one at 260. Let's see if this one will get filled. And we'll try that. So that way we spread our risk across 2 expirations as well. Let's try and get filled that one and play with it. And this is what happens sometimes is that, yeah, you're looking at this one, you're looking at that one, and sometimes they get filled a little faster, sometimes they don't. Again, we'll just see how this plays out. Because you don't want to start off with a very bad position. And with Lulu and stocks that are less liquid, you definitely have to be a lot more patient because they can whip you around quite a bit. So again, you play with this. Let's see if this is going to get filled at 265. So maybe, maybe not. There you go. We got one filled, and we'll let the other one sit. But what I'm going to do now is, now that I got this one filled, I'm going to go ahead and see here and close out the order as well. Set a good till cancel. All right. So now what we'll do is we got filled at 265. So if you want to take a calculator, all right, we'll take 265 here times $1.50. Okay, so we're trying to get out for about 395, 397. So now what I'll do is take this, analyze closing trade. There it is. So I'll put 397. There it is. I'll create a duplicate order. Good till cancel. Put it in my 50-50 spreads, and there we go. We'll see if it gets filled. Let it work. The other one still didn't even get filled, but that's okay. I'm all right with that. So we'll wait for that one to try and get filled, but there we go. Let that one work and see what happens with time. And that's how maybe I would approach a trade like this. And that is because the market, what you'll see is the market dictates, you know, we sold off quite heavy here, right? And now we're coming back. So if we get the same action to the upside with Lulu, and we can get back into kind of this upper level, and Lulu does the same thing, then yeah, then exactly, this is what we're looking to see with these types of stocks, and we're just trying to get in them and then get out of them. That's it. There's nothing too complex about it. It's just a simple management style and strategy. But today, you know, this account's definitely taken a hit of about $1,500, and the other day it took quite a bit of hit. The other thing I might look at doing is adding to some QQQ positions right now, but this is just kind of a bonus. My main focus today was for Lulu. So what I could do is also look at, you know, since I'm always looking to accumulate some long positions on Qs right now, and I just use it kind of as a long. What I can do is just take here, we're looking at a delta, let's say a delta of about 25 or so, and do about a 350, 345 spread. And we're trying to get about 98 cents. So we're just trying to keep adding to this, you know, bullish. We've been down a couple days, so we're trying to get a little more bullish on the Qs. And if you just look at the Qs here, you can see right there we've sold off quite a bit, a lot of red days. So maybe you'll get a green day sometime here soon. So you're just trying to add a little bit. So I could add 2 here, to another day, to another day, and to another day. So we're just trying to send that in, and this will go into the long portfolio. Something that you're always doing on a consistent basis, basically. So anyways, I hope that helps. I'm just going to let that sit and let them work the orders so you get an idea, and probably get these filled in a little later. I was doing some risk arrays here with somebody on a coaching session today. So we were doing like SPY, but risk arrays. And you can see here these risk arrays. We're just spreading out our risk across different iron condors and stuff on some of these. But I do want to start adding some more bullishness to this, because if the market snaps up, these will get into a little bit more trouble. But, you know, this is how you might look at doing some iron condors, is spreading them out across different expirations. Anyways, thanks for joining me. Enjoy the week ahead, and I will see you next time.